I don't normally do single stock analysis videos on Sunday, but I had to talk about MPW stock. This is a stock that fell over 32% on Friday. A lot of you are asking me about this company as I made pretty much 2 videos on MPW, and I was bearish on the company in these 2 videos, but now the stock is sitting at $3.55 per share, down 33% in one day. So I'm going to evaluate the news around MPW, see if the move is justified. Is it some kind of a generational buying opportunity on a stock that is sitting at 26 cents on the dollar? It's the tangible book value per share. If you take all the assets, you take out the liabilities, it's sitting at 0.26, so 26 cents per dollar for MPW. Is this a value trap? Is this one of the best opportunities we've seen in the market in the last 5 or 10 years? Is this, such a generational buying opportunity, as I said in the title? Or is it just another value trap and maybe it's going to go much lower? So it's going to be a very interesting video. And if you don't know, MPW is basically a medical REIT. They own many healthcare kind of facilities in the United States and across the world, in Europe and South America and in many other places, over 441 properties from 55 operators. So it's a very large REIT in the medical space. Now, out of those 55 operators that MPW has, the tenants of MPW, a lot of them are in very big trouble. And I talked about some in the last videos I did. And one of the most popular ones is Steward Health. And this is the recent update that caused the stock to crash 33% in one day. And the largest tenant, Steward Health, they informed MPW that they have some kind of liquidity issues. They're not going to be able to pay the kind of debt that they had. They're going to make partial monthly rent payments. They are late on around $50 million of those leases for now, for 2024 for MPW. They are late on around $50 million. So to protect MPW's assets, MPW decided to loan Steward Health around $60 million through some kind of a bridge loan. And this is not something new. MPW has been doing it for a while. Steward Health has been struggling for a while. MPW keeps, loaning them money, and they are getting pretty deep with Steward Health, as Steward Health owes around $215 million to MPW. And based off the recent update from Steward Health, which is not a public company, we can see that things for them are getting much, much worse. They are not getting better. And this is very concerning because Steward Health makes up 23% of revenues for MPW. 23%. Now, what if Steward Health goes under? Then what's going to happen to MPW? 23%. They've always been bragging that they diversified away from it. It was around 28.7%, and that was 23%. Yes, that's great. But 23% is still massive from Steward Health for MPW, for such tenants that's in deep trouble. And it's not the only one. I believe Priori also was in trouble with them, and there was some other kind of tenants, I don't remember their names, but they were also in trouble. So it's not just Steward Health, but Steward Health alone can cause massive, massive problems for MPW if it goes under, and things are not getting better for Steward Health. They owe MPW $250 million. So this is very, very bad, and this is the reason why MPW has been crashing, and it's been very bad for the REIT in general. Now, in terms of the dividend right now is sitting pretty close to 20%. 20% dividend yield. Now, you're not an amateur, and I'm sure you know that the dividend will most likely be cut. 20% is not sustainable, and most people know that. And MPW has been cutting the dividends. I talked about it in my last video. Right after the video, the next day, MPW cut the dividend. And a lot of people said it was priced in. But guess what? Even though MPW was down, it was not priced in, and the stock went down after. And I believe the dividend will be cut again, sitting at a 20% dividend yield. Now, surprisingly enough, if you do look at the coverage of the dividend, you look at the dividend per share for 2023 and FFO per share, adjusted funds from operation per share for REITs, it's pretty well covered. So the dividend is not as risky as most people believe, but MPW has a lot of different expenses they still have to pay for, especially debt. They have a lot of debt maturing. If you look at the debt of MPW, they have $430 million maturing in 2024. They have $1.4 billion maturing in 2025. They have $2.9, almost $3 billion maturing in 2026. with, I mean, pretty decent interest rates back then. But now interest rates are much higher, and MPW is in a much worse financial position than it was before. So if they do want to refinance this debt, they will likely be able to refinance it, but it's going to be at double digits kind of interest rates, which is going to kill the free cash flow and it's going to kill the dividend even more, which is why I believe the dividend will most likely be cut. And I'm not sure why MPW didn't cut the dividend much more before. This is what they should have done. They should cut the dividend as much as possible and start buying back their own debt at the open market for a massive, massive discount. This is an example of a bond yield for MPW. It was yielding 1.6%. The bond was sitting at 105. Well, now this bond yield is sitting at $80 or 80 cents on the dollar, and it's yielding around 11.6%, from 1% to 11%. And if MPW wants to refinance these billions of dollars in debt, they will likely have to pay between 8 to 12, 13% interest rate. And this is going to kill the dividend anyway, which is why I believe the smart thing from MPW is to cut the dividend as much as possible and start paying down the debt aggressively. This is what the company should be doing, trading at 11.6%. They can buy them for a discount on the open market, so the total debt will be much lower than something like $10 billion. At a discount, it could be around $7 or $8 billion in total debt. This would save the company a lot of interest expense and stuff, which is the reason why I am not buying MPW yet. I keep waiting on the stock, and the stock keeps going lower. And maybe right now, MPW looks like a generational buying opportunity at 26 cents on the dollar. It does look very, very cheap. MPW could go up 100% in a week or two. I mean, you could make these kind of returns if you're into gambling and you don't like to take risk-adjusted returns. But for me personally, I am not seeing any changes from the management. I am not seeing the management do anything differently. They are still stuck in the same boat with Steward Health. They are still paying this very high dividend, which I believe it should be massively cut. And I'm not seeing them being disciplined enough in terms of selling assets, cutting the dividend, and paying down debt. So for me, the trend is lower, and MPW is going to keep experiencing problems, more problems from various different tenants. So for me personally, MPW, I am not buying it just for my own personal taste. I would like to buy MPW once I see things improving. But if I'm not seeing things improving, I'm not going to buy MPW. Even if MPW was trading at $5 or $6 per share, and if I saw the management being disciplined, or maybe some kind of an activist came in the company and they're selling assets because they have a lot of valuable assets, if I see this happening, even though MPW is not sitting at $3, sitting $5 or $6, the stock would be cheap, and the trend in terms of improvements would be to the upside. But to me now, the trend is to the downside, massive deterioration in shareholder value. So I don't like it. I'm staying away from it, even though it's cheap. And if you're into betting and you have a high risk tolerance, you could make a lot of money with MPW if you time it right. But for me as a fundamental investor, I don't see the fundamentals with MPW improving, so I'm not touching the company. And this was my honest opinion on the stock. I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I hope to see you in another video.